Mutual fund investors typically invest for medium to long-term goals. Faced with a sudden need for funds, investors tend to redeem investments. But guess what? Investors can actually seek loan against their investments. But how should you go about seeking these loans? What are the criteria that investors must fulfill to seek loans against their investments? Let's understand all of this with Aditya Agarwal, co-founder of Wealthy.in. Aditya, good evening. Welcome to the show. So, although taking loan from your investments sound like a very tricky thing, after all, you are accumulating money for a particular financial goal. And between that, if you have a financial crunch, and I think this should be the last resort one should be looking at, in breaking their investments. But having said that, what kind of financial assets are we talking about when it comes to taking loan on your investments? Can you just list that out first?
Investments can be borrowed against. So you can borrow against your stocks portfolio, you can borrow against your mutual fund investments, you can borrow against your FDs, even, you can even borrow against your savings insurance policies. And today, I think because we have a big ESOP movement in the country, today there are companies that can even give you loans against your ESOPs in a company. So all kind of financial assets possible, you can actually borrow against those financial assets.
Now, what's important is I want to understand who are eligible for this. I mean, are we talking about Indian investors? We're talking about NRIs investors? What's the formality that gets into it?
Yeah, I think so. All kinds of investors, whether you are an individual or a non-individual, you can borrow as long as those investments belong to you, right? And I think, for example, if we talk about investments like stocks or mutual funds, typically if I have stock investments and if I want to borrow, let's say from a bank, then typically those banks will want that my stock investments have to be in their custody, as in my demat account should be in their custody. I think that's requirement number one, because if my investments are in their custody, they can actually lien mark them and say that these units or these shares are borrowed against, so that I cannot redeem them from anywhere else. So typically, when you talk about capital market investments like stocks or mutual funds, I think that's the typical first requirement of the lending institution, that they should be able to lien mark your units. And typically people want that their existing investments should be with them only to be able to lend to you, right? But there have been some developments there. Today, I think we have seen some developments where, for example, your mutual funds might be direct, but you can still borrow against them. Fintech companies are actually trying to build solutions where wherever your investments might be, you should be able to borrow from, even if your investments are with institution A, you should be able to borrow from institution B.
All right, let's talk about various aspects because one needs to understand it's not only mutual funds you're talking about. Is it possible to even take loan on your insurance policies?
Definitely. So if you have a savings insurance policy, for example, LIC, or let's say any savings insurance plan, you can actually borrow against that policy as well. It's slightly complicated, the calculation, because there is a concept called surrender value. So let's say if you are paying 5 lakh rupees premium every year, and let's say you've paid your premium so far for 4 years. So in those 4 years, your policy would have accumulated some surrender value, right? And that surrender value is typically lower than the premium that you have paid. So you can actually borrow against that surrender value. And in fact, insurance companies, LIC especially pitches that as a solution, because LIC's most of its investors or savers are, small savers. So they pitch it very aggressively. Like I know that my nanny, I helped her actually take a loan against a LIC policy from the LIC branch.
So let's understand this with an example, because a lot of Indians, I think, more than mutual funds, have insurance policies, and here we're talking about traditional insurance policies. Okay, so let's just dive deep into this.
Sure.
Explain this to me to an example, and taking a traditional life insurance policy under consideration. If someone wants a loan of say 50 lakhs, and they've got a policy that gives them a sum assured for like 10 to 15 lakhs after a certain period of years, how does it go about?
Yeah, so let me reverse it a bit. Let's say I'm paying 5 lakh rupees a year for a savings insurance plan, right? And let's say I have to pay it for next 20 years. And I'm in year 10th. And year 10th, I have paid so far 50 lakh rupees for that policy. Now, in that year 10, my policy would have accumulated some surrender value, right? Let's assume that surrender value is typically by year 10th about 70% of what you have paid, right? So my policy has acquired a surrender value of 35 lakh rupees. So I go to my insurance company provider, let's say it's LIC, for example. I go to LIC and say that this is my policy. It's accumulated so much surrender value. Can you please provide a loan to me against it? And LIC, if you go to visit a branch, they'll be happy to assist you in providing a loan which can go up to 70% of your surrender value. So in this case, if your surrender value is 35 lakhs, you probably will get a loan of about 22 lakhs to 22 lakh rupees on that policy.
And how is the
Because as you
repayment?
know, it's very hard to break an
Sure.
insurance policy in between. So it
Exactly.
serves as well.
Yeah. So, and what will be the repayment strategy? How do you repay that? Because you've taken a loan and you're also
Right.
paying the premium. Is that the repayment strategy? Is there any added percentage in the premium that needs to be given?
Yeah, so it's like any other loan. So
Okay.
for repayment period will definitely be lower than the remaining period that you have for your premium, right? So for example, if I have 10 more years left for my premium, so maybe I'll get a 7-year loan. That 22 lakh rupees might be a 7-year loan that I have to repay on a regular frequency, just like I would repay any loan against my property, right? If I take a loan from a bank.
Percent of at what rate is the loan given?
So that rate can depend, right? So for example, someone like LIC might lend you at 10%, right?
Oh,
But NBFC might lend you at 12%.
okay.
So the rates are, because, rates, these are treated like personal loans. So they are not really, a loan against. So they're typically cheaper than personal loan, but more expensive than a home loan. That's the way to look at it.
And what happens if there is a lapse in just repaying any installment here, or that's equal to lapsing your premium amount?
Yeah, I think so. That's great because in LIC or in a savings plan, you have already paid them, let's say 50 lakh rupees or 50 lakh rupees in this case in 10 years, right? So they already have some money from you, right? And that's why the policy has accumulated a surrender value, right? So whatever they are paying to you is actually as a loan would be lower than that surrender value. So to that extent, they're actually paying you as a loan lower than the asset, the value of the asset that you have at that point in time.
All right. So, can these loans be taken against your term insurance plan also? Because
No.
that's the modern insurance policies, life insurance policies. No,
Yeah. No,
not
term insurance, no, because term insurance is a protection product, right? So
sure.
it's
Right.
there in
Totally.
case of if you are not around. So term insurance is no such, it's not a savings product. It doesn't grow in value, right? So it's not really an investment. So you can only take loans against products that are actually a saving or investment in nature.
All right. Let's talk about PPF. How does that work? You have a lock-in for like 15 years, and maybe after a few years there can be a partial withdrawal also. But then, what about taking a loan on the amount that you've accumulated in a PPF or a PF, both?
Yeah, so there again, so it sort of depends. I think one thing that probably hasn't hasn't sort of developed. It's not as developed a market, just like a loan against property. So we are still seeing models emerge where people can actually borrow against their financial assets easily. But in case of PPF, typically you can only borrow from the institution where your PPF account is, right? And EPF, we have not really seen a lot of instances where people are able to borrow against EPF because it's a complicated. EPF is in custody with your EPFO, right? So how do you sort of give that custody to a lender? So I think in EPF, we haven't seen a lot of successful implementations of to be able to borrow against your EPF balance. Or in case of PPF, you can definitely borrow in PPF against the, wherever you have an account, that PPF account, you can borrow from the same organization or same institution against that PPF.
Amount, and the loan amount will depend on your accumulated amount, or that's a separate thing?
So if it's a debt-like instrument, right? If debt, as in like PPF is a debt-like instrument, it will not really go down in value. So there you can expect about 60 to 80% of your accumulated value in terms of loan, right? Just like how your property, right? You can take up to 80% of your property value. But if it's an equity investment, then typically the ratios are lower.
Let's talk about another favorite investment instrument that Indians have, which is fixed deposit. Now, how does that work?
Yeah, same way. So if I have fixed deposit with, let's say, a Bajaj or a bank, I can borrow against it, right? And yeah, the loan against fixed deposit is probably the most straightforward, right? Because you have a bank, you've done a fixed deposit with them, and you can just get as a collateral and borrow against it. So that probably is the simplest of all instruments in terms of taking a loan against.
And there is no additional amount to be taken. Whatever is the amount that you fixed, you will be given a loan equal to that amount, or you can just go higher or demand a higher amount as
No,
well.
you can't. It will have to be lower than the total value of your assets.
Okay.
Just like how your properties, right? If I have
Right.
1 crore home, I'll probably not be able to borrow for more than 70 lakh rupees, right? So I think the same principles apply. But as I said, the market is not as well developed as like loan against property. Everyone understands today, right? All of us
Exactly.
understand.
Yeah.
But loan against investments is still sort of, it's like I would say penetration is very, 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 very low right now.
Exactly. Also because people need to have an investment strategy first in the first place to understand that loan can be taken on it. But then let's move on and let's talk about shares and stocks. I will come on mutual funds in the end once again. But how does a stock portfolio loan on your stocks actually work?
So let's for example, I have an investment account with, let's say, a bank A, right? I have a demat account where I've actually, in demat account, I've bought some stocks, and I go to that bank A and say that, I have a 1 crore stocks portfolio, and I have need of 20 lakh rupees to, let's say, build another floor, of home, right, at my home. So, bank might say, okay, great. You have these stocks with us. We will lien mark them. You can't sell them from anywhere. Yes, and continue to earn any dividend on those stocks, but you can't sell those stocks anywhere. And let's say your requirement is 20 lakhs. So they might say, okay, up to, let's say, 50 lakh rupees of your total stock portfolio as of today is what we are lien marking, right? So that you can't take any action against those stocks for until you repay your loan.
All right, let's talk about mutual funds because here a major amount of literacy is really needed. So, how do you take a loan on your mutual fund units? Considering that you've invested maybe for a medium term, say 5 to 6 years, and there's a financial crisis, do you have to count in as per units or the investment cycle that's gone into it? What would be the criteria of taking a loan?
Yeah, so I think, let's say I am an investor, a mutual fund investor, and I have a mutual fund portfolio of, let's say, 30 lakh rupees across 3 schemes, right? And 3 schemes, and each one of them has some units. And I go to a bank, right? And I tell them that, these 30 lakh rupees of investments I have, I need a loan of 15 lakh rupees, right? So I think the first thing they will see is that whether my investment is all equity or it is equity plus debt. Because on equity investments, as I said, I get a lower ratio, right? So if I have 30 lakh rupees of just equity portfolio, I might not be able to get a loan of more than 15 lakh rupees, right? And then just like how stock works, then, essentially they will confirm my unit balances, right? And then they will lien mark those unit balances. So even when, for example, if you have taken a loan against your mutual fund, right, if you download the statement, it will show a line as lien marked. So what that means is essentially, right, that those units are lien marked to a lender. Just like, for example, if you borrowed a car, I don't know if you borrowed for a car ever, but when you borrow a car, the RC says hypothecated to a bank. So similarly here, your mutual fund investments will say lien marked to a particular bank, and and after that it just works as stocks do, right? So your units, those particular units are lien marked. You cannot do any operation on them. You cannot do any withdrawals on them. You cannot do any switches on them. But yeah, if there is a dividend coming from those units, that will keep coming to you.
All right, I think that will be all. Thank you so much for helping our viewers today and helping them understand how to take loan against their investments today.
Thank you, Kavita.